What's going on? Billy here from Storm Trades with another trade recap. We're going to run through the gold futures long trade that I took on Tuesday, August 5th for a really nice 2R win. I had a neutral daily bias and originally a bearish hourly market structure narrative. But after we moved strong through my invalidation level on the hourly, my analysis turned bullish and I targeted the previous daily high and beyond. So let's get right after it. On the chart right now, we've got the daily chart. This is the last four candles, and let's just mark up the chart the way I do every single day. I mark out the previous daily low, previous daily high, and I want to run a fib from the previous daily candle, which is indicated right here. Now, we're always seeking internal or external range liquidity. Price is always seeking that, right? So we want to see where price is currently located and where it has been delivering from. So we have some internal range liquidity that we dipped into yesterday, okay, the day prior. So this would be Monday. And whenever we have internal range liquidity, we're looking for external range liquidity, okay? So in this case, I would be looking for a move lower. However, we most recently had taken a swing low on the daily, and we had an extremely strong bullish candle close right here, okay? So I was conflicted. Now, if you want to take a look right here, we also have a bullish daily fair value gap. So we're kind of sandwiched in between a bearish daily fair value gap and a bullish daily fair value gap. The hourly is not super clear, okay? I could see price going up, or I could see price going lower. Whenever this happens, I don't not trade. I rely heavily on the hourly time frame to tell me what's going on. All right, let me pull up the hourly chart right here. All right, now whenever I'm looking at the hourly chart, I'm looking for the most recent change in state of delivery to give me a hat tip on which direction price should continue. As you notice here, we came up and entered the previous daily high, or excuse me, this previous daily high here is when we came up and entered this daily bearish fair value gap. So whenever we hit internal range liquidity here, this is a high time frame target. We would look to see and form a reversal from this area, okay? So do we have a change in state of delivery up when we took that internal range liquidity? And well, we do, right? We have a change in state of delivery right here. And this was confirmed by the formation of these two hourly fair value gaps, right? So this is a crystal clear change in state of delivery for me, and it makes total sense from a narrative standpoint because we entered on Monday, we entered into this bearish daily fair value gap. Now we would expect price to continue lower, right? So this was my plan going into the trading session, right? Either we come up into this imbalance and deliver lower, or we come into this higher one. Now, I don't talk about this a lot on these videos, but it's very important, and I make note of this on the in the Discord at the Unicorn University whenever I'm putting my analysis together. And I want to mark out my invalidation level, right? So it's important to have an invalidation level because it's sort of like your game plan, right? So, I can say, okay, well, price could go up into here and then deliver lower. Great. If it goes up into here, it could still deliver lower. Great. But what happens if price comes up here and closes strong through two of these bearish hourly fair value gaps? Well, in that case, right, if that happened, that would be an invalidation, right? So I have an invalidation level right here, and I'll be watching price. Obviously, I'm looking for shorts, okay? In this particular scenario, I'm looking for shorts, right? But I just want to make note that I believe it's important to know where your invalidation levels are, not only when you go into a trade on your execution time frame, but also just when you're looking at higher time frame and trying to study market structure. All right, now on the very next candle, right? Candle close is the hourly candle. Okay, look at this. We've already inverted this fair value gap, right? So I'm going to turn this. This is now an inversion. And we have closed extremely high in the upper quadrant of the higher one. Now, I'm still technically here looking for shorts. However, we're very close to getting an invalidation. Okay, my invalidation was a close through these bullish, or excuse me, bearish hourly fair value gaps. Let's go to the very next candle. All right, now we have invalidated this this idea. Okay, when this happens, especially when we have a nice previous daily high up here to target, I actually will now change my bias. Okay, and not a bias. I've changed my bias is neutral. I've changed my market structure outlook. So I'm now looking for higher prices. And at this point, I've started to seek some sort of way to get on side with a higher move. Now, how much further do we have to go? Right? Talk about the 1/3 ADR all the time. Well, would you know it? That we came down here and swept the 1/3 ADR prior to inversing both of these hourly bearish fair value gaps. Right? So this is an inversion now. So very interesting, right? We swept the 1/3, and now look all the way up here, right above the previous daily high, inside of the upper quadrant of the daily bullish fair value gap, is the 1/3 ADR. So what does that mean? It means I still have a ton of room to go. Okay, if we had already swept the upper one, the bullish 1/3 ADR, then I think I probably would have stayed out of this trade because price has already moved a ton here, and you'll see when we move to the M5 chart that price moved a ton already. However, using the 1/3 ADR always gives me an idea of how much more room do I have to go, and do I have a trade still? Okay, so I'm going to move down to the M5 time frame, and I want you to take a look at this. So let's just clear this up here for a second. All right, check this out. Here's the 1/3 ADR. Okay, this is in the morning. We came down, we swept it, we closed through it, and we've already moved all the way up here and taken, okay, the London high. But we didn't sweep the London high, right? These are little things that that I'm starting to notice as I do my back testing. And my forward testing is, this is just a very significant swing point. Well, if we sweep the swing point, we'd expect price to maybe come back down in and maybe even reverse. However, we closed strong above the London high, and we left the Asia high above. So a strong close above a swing point would indicate strength in the market. So even though we've already moved all the way up here, we missed the reversal. Okay, we still have a significant amount of time to go. Room to go until we hit the previous daily high and until we hit the 1/3 ADR. So this is what I'm looking at. Now, currently, is price in any internal range liquidity? It is. Let me just mark that off right here. We're in an M5 fair value gap. So I would look for price to move and hopefully close through this down close candle. Let me move price forward here as we didn't get over that right there. We're watching price. We did not get through this. Okay, we would have liked price to close above that. That would have been an indication that we would go higher. We didn't. Okay, so that means we are probably most likely going to come down and test this swing low right here, which we did. I'll mark that out. All right, this is a external range liquidity on the M5. Inside of internal range liquidity, this is beautiful. I'm going to mark off the series of down close candles that took that liquidity, and if we get a close above that and we haven't already ran the Asia highs, I want to get involved. So let's move price forward, and on the very next candle, we get a strong close through. This is where I entered. Now, I had a couple of different targets on this trade, okay? I had 3 targets, in fact. I had the low-hanging fruit, which was the Asia high. So I'm going to put in a 3 buys here. So 1, 2, 3. So 3 contracts. Stop loss below the fair value gap, and ultimate take profit here at the 1/3 ADR. That's my ultimate that's my ultimate take profit on this trade. But I wanted to take some along the way and at the at significant liquidity zone. So we had Asia high, we had the previous daily high, and had the 1/3 ADR. All right, I'm gonna move price forward. And right there, okay, I sold 1 contract. right there, right? So I've got some profit locked in. Move stop to break even at this point. Okay, and move price forward. Now looking for my next target is the previous daily high, which we took one more right here. We took right here. Okay, sell one more. All right, there's my second target, and now my ultimate target is, as I brought this my stop below this swing right here. Okay, the ultimate target is the 1/3 ADR, and we take it right there. Okay, there's the trade. Took this inside of Unicorn University. Tons of great traders inside of there. Always, there's people sharing trades on 6E, gold, NQ, ES, oil. So, and I just appreciate all the traders in there. So just always give it feedback. But if you guys got anything out of this at all, I appreciate it. Like, subscribe. Thank you so much for watching. If you watched all the way through, I really appreciate it. Leave a comment. I really appreciate them. All right. You guys have a good one.